Hello dear students, my name is Gaurav Bansal, and in this session we are going to discuss the Global Financial Stability Report. So we are going to look into its conceptual aspects, that what is financial stability, why it is required, what this report talks about, what are the risks to the global financial stability as of now. Okay, so we talk about all of that, and then we talk about some of the factual aspects about it. Okay. So for example, it is IMF which releases this report, and it is released semi-annually. That means it is released twice a year, and it is released in spring and in fall, or which you also call autumn. So there are two editions, April and October. And apart from these trivial facts, now let us look at the overview, that what it does, what it is focus about. So this report basically focuses on, first of all, the ranking and the data on the current financial stability. What are the various risks present for the global financial system? How are the different central banks performing? What is the risk involved in major economies? And if we talk about the global economy as a whole, what are the major emerging challenges? So if we look at the text provided by the IMF, then it provides an assessment of global financial system and markets. That's what I've told you, that it gives you data, rankings on the current functioning of different economies, major economies. And then it talks about the emerging market financing in the global context. So again, this I have already explained. Now, it also highlights what are the major issues or emerging issues that will pose a risk to the financial stability. So for example, in this report, it talks about the COVID-19, which was expected. It talks about the cryptocurrency, which is an emerging challenge, and then it also talks about the climate change. These are the three major focus areas of the current report. So these are the risks for the global financial stability. And then it talks about that if there is economic imbalance, if your macroeconomic stability is lacking, if your economy does not have a good and low fiscal deficit, current account deficit and inflation, then what may happen, what might occur. So it talks about all those risks. Okay. Then what are the indicators? The global financial stability, first of all, how do we rate it? What is the stability at present? It talks about that. Then it talks about the emerging and the frontier markets, the markets which are critical for the world, which are the growth engine of the world at present, which are emerging and pushing the global financial system along with it. These are the markets that are critical for the world because the growth is being driven by such markets. Not from the mature market. Mature markets are also important, but growth largely comes from such markets, emerging in the frontier markets. Then the corporate funding. Corporate funding is also very important because under what conditions companies are getting finance, how easily they are getting this finance, or how much difficulty they are facing in getting the finance. Everything affects the functioning of corporates, the startups, the business. So it has an impact on the entire business environment. The corporate funding affects the investments. So in that context, the corporate funding is very, very important. Bank capital. Bank capital is the cushion for the bank. If something goes wrong with the funds of the bank, which ultimately belongs to the public, because the funds that bank use for lending out is the fund taken from the common public in the form of bank deposits. मतलब मैं ये कह रहा हूँ कि बैंक जो उधार देता है, बैंक के जो लोन्स हैं, वो पैसा बैंक का नहीं, वो कॉमन पब्लिक का पैसा है. और कॉमन पब्लिक का पैसा अगर रिस्क पे जाता है तो बैंक के पास क्या फॉल आउट ऑप्शन है, बैंक के पास क्या बैकअप है? सो बैकअप है बैंक कैपिटल. बैंक कैपिटल इज अ वेरी वेरी इंपॉर्टेंट इंडिकेटर. It is the cushion, it is the support system of the bank. So it is one of the most critical target also for the bank stability. For example, we talk about the capital adequacy ratio. That ratio defines how much capital do you need. So bank capital, whether it is increasing, decreasing, that talks about or tells us about the bank's safety, the bank's security and stability. Corporate sustainability. So the existing corporates, how sustainable are they, how well they are performing, so that is obviously also very important. Just like bank, the corporate sustainability is also very important. So these are the various parameters on the basis of which the report talks about the current scenario. Now, before we start, I would like to introduce something here. Although the report does not define this the way the American Fed has defined, I've looked out for various definitions of financial stability. The most beautiful and the precise one I found with the Fed, the central bank in USA. They define financial stability as that financial stability is never about, it is never about preventing failure. It is never about stopping people or business from making losses. मतलब कि losses होंगे, failure होंगे. Okay, business ideas are always risky. There will be failures. It is never about preventing businesses and people from making losses. It is never about that. That is not financial stability. Financial stability is that such failures should not affect the long-term stability of your financial system. That is how we define the financial stability. That system should work efficiently even with such events. And according to me, this is the best way you can define financial stability. These are not my words. These are the words by the American Fed and the no nonsense and the best approach. Then they further define that a financial system is considered stable when people are able to use financial system for various purposes without any kind of risk, without any kind of worry or tension. The system is technically sound so that there are no glitches which can disrupt the payments and the processings. The system is also stable enough so that people can take their decisions without any kind of worries. Companies can very easily process the payments of their employees. Then employees should get their salaries accordingly very quickly, and they can rely upon that system. They can rely that this system will continue to work and it will continue to work to their favor. So that is what the Fed says, that banks, savings, loans and other financial products and service provider, they are able to provide everyone, which is household, community, businesses, with the resources, services that they need to invest, grow and participate. So all of us require various financial products. We require deposit facilities, we require investment facilities, we also require loans. So we should be able to get all of this without too much of worry. We should be able to get all of this without a concern. And once your system can ensure it and also ensure that if there are few failures around, they are not affecting, then we can say the financial system is stable. Okay, and then it further defines that businesses need to borrow money to expand, build factories. Okay, so businesses need to grow, and in order to grow, they need finance. Now, the process of raising finance should be less troublesome, should be smooth, should be less costly and quick. If your financial system can do so, then also we call it financially stable and sound. So companies need to hire workers, make payrolls, as I've just said earlier. So all of this require a functional financial system so that people do not have to think about, वही मैं जो आपको कह रहा हूँ कि मेरी सैलरी आनी है तो मुझे उसके लिए सोचने की ज़रूरत नहीं है, मेरी सैलरी टाइम पे आ जाएगी. मेरी कंपनी ने प्रोसेस की तो उसको फाइनेंशियल सिस्टम के अंदर टाइम नहीं लगेगा. मेरी कंपनी को ये पता है एक बार सैलरी प्रोसेस होने के बाद एम्प्लॉय के पास पहुंचने में 3 घंटे लगते हैं. सो दैट शुड गिव कॉन्फिडेंस टू माई कंपनी so that my company do not have to think too much about it. My company do not have to plan in advance. So all of those things come into picture here. So If your system can manage all of it, then you call it sound, stable and good system. And a good financial system is really required for the growth of businesses. Otherwise, how businesses are going to finance themselves? Okay, so this part was not covered in the report, but I wanted to discuss it so that you can understand the importance of financial stability. So what is the focus of 2021 report that I've already discussed? There are three focus areas, that is the COVID-19. COVID-19 still has impact on the global monetary policy making and the global finance. Then the cryptocurrency, which is emerging as a big challenge for the monetary policy. And lastly, the climate change, which also has an impact. Let us look at it. Let us talk about the COVID-19. Okay, so the report says that due to the COVID-19, the global economy has excess liquidity, and it is this particular condition that report is highlighting about. Because there was COVID-19, because there was a lot of uncertainties, because there was a lot of risk, due to all of this, people have delayed their investment decisions. People and companies, they have stopped or they have reduced or they have postponed their investment plan. Due to this, investments have come down, growth has come down. In fact, a lot of economies have contracted in the fallout of COVID. As a result of all of this, the government has taken a step to ease the liquidity, to increase the money supply in the system so that interest rate remain down, so that money supply is easy, so that anyone who wants to take loan can get it very easily, so that anyone who wants to make investment can do it very easily. So that condition still prevails even after almost 2 years since COVID has been here. Okay, so it says that financial conditions in advanced economies are eased further. Eased further means more money supply. Okay, and it is increasing. And the monetary policy remains accommodative, means it is still increasing the liquidity in the system. If you want to understand about liquidity, if you want to understand some of these concepts, then I would suggest you to watch our videos on economic survey and the budget. In those videos, particularly if you can watch the video on the financial system, that is available on our YouTube channel, you can search for that. You can search financial system economic survey with my name Gaurav Bansal, and you can, I think, easily find the video. So you can search for that video, and over there you can get into the real depth of the liquidity and other important financial aspects and concepts. So the idea is the monetary policy remains accommodative and its money supply is increasing further. I've also shown you charts that supports this claim. Then the financial conditions in emerging and frontier markets are little changed, okay? But the rapid spread of virus mutation poses a threat. This is where it talks about the vaccination and the risk of the mutations, that the initial wave did whatever damage it did. After that, we thought there would be a swift recovery, but unfortunately, even after the first wave of COVID, we have seen that there have been very bad mutations. Particularly the Delta variant was very lethal, and the economies, the people who were now very hopeful, who were all very excited that now the worst phase of COVID is over and they were thinking about restarting their lives. All these people were for shock as Delta virus killed their near and dear ones and crippled the economy. So that is also a bigger risk for the global economy. And this is where economic survey is already defined actually. If you check out the economic survey, it says that we can consider vaccination as a macroeconomic indicator now. Because what are macroeconomic indicators? Macroeconomic indicators are the indicators which can tell you about the upcoming growth in the economy, which can indicate the stability, whether your economy is at risk or whether your economy is stable. So today, the extent of vaccination, in fact, very easily tells you about various aspects. So vaccination is also a critical component of financial indicators today. So if you are vaccinated, the newer waves will have less and less damage, and economy can work without much of damage or without much of the disruption. This is how vaccination can prove to be a major game changer. Then credit conditions have improved in the corporate sector, so there is nothing as such that I have to explain here. The conditions in the finance, they have improved, and that is very easy to understand because of the first point. Since governments have been pumping more and more money, since easy finance at low interest rate is available, the corporate finance would be easily available. So this is very much understandable. The credit conditions definitely should have improved in the corporate sector because of the accommodative monetary policy. And accommodative monetary policy, I've told you, basically means expansionary monetary policy under which we increase money supply, cut down interest rate, and we accommodate for economic growth. And then it talks about the advanced economies. It says in order to accommodate, in order to increase money supply, what the central banks have done in the advanced economies, these banks have opted for open market operations. I hope you understand what is open market operation. So open market operation, if you want to use that tool in order to increase the money supply, you have to purchase the bonds from the system. You purchase the bond as a central bank. I'm saying that if you are a central bank and you want to increase money supply, what you are going to do? You will purchase the bond. When you purchase the bond, you release more money into public, and that is how we increase the money supply. So that is what we have done here. The advanced economies, they have purchased the bonds from the market and they've issued more cash. That is how they have increased the money supply. But in this process, they have purchased a lot of assets. So that is exactly what the report talks about, that the central bank balance sheets in advanced economies have grown considerably during COVID-19 to ease the financial conditions, and as a result, I'm skipping here a bit, the asset held on their balance sheet is close to 60% of the GDP. Today they have purchased so many bonds that the bond holding by the central banks in the advanced countries, that is almost 60% of the GDP. Before the pandemic, this ratio was almost 30%. So think about it, they've pumped almost double the money that they used to earlier. So money supply has increased considerably. And you know what is the biggest negative outcome of the increase in money supply? Inflation. And today, USA and other major Western economies, they are facing bad inflation. So everything comes at a price. If they followed a certain policy, then they had to pay a price, and today they are paying that. Now let us talk about the crypto. We have discussed the COVID. So the report also identifies that in India, which was almost a sleeper market for crypto, which was not showing much interest in the crypto in the early years, has shown a sudden spurt. Now very recently, in the last 2 years, we have seen a massive uprise or uptick in the number of people who are investing in various forms of crypto, and this market today is significant. The number of startups in the blockchain in India, they have surpassed 300. That means they are sizable, and daily transaction volume is now almost $500,000 per day, $500 million per day. So that is quite significant. And as per a survey, they found that 99% people in the survey say that they are aware of crypto and they did the trade in the crypto. And according to the survey, India is ranking higher than China, USA, Germany and Japan in the crypto adoption. Frankly, this global consumer survey, its data should be taken with pinch of a salt, frankly, because if you look at the crypto volume transaction in China, it is way ahead. It is multiple times compared to India. So to say that 99% of the surveyed people, they did trading in crypto, means there is something wrong with the sample survey. So this consumer survey is definitely a questionable thing. Okay. Yes, India has shown sudden spurt, but if 99% of your respondents invest in crypto, that means you have either, interviewed only certain section of people, certain rich people, or certain people who are already investors in stock market, gold, or forex, etc. Okay, so maybe you are interviewing the group of investors only. Anyways, let us move ahead. This report is anyways not very important, this survey. Now, these are just simple facts that I have given you. Now let us come to the core concept where I would like to spend some time. If crypto transactions are increasing, why that is an issue? हम इसके बारे में बात ही क्यों कर रहे हैं? क्रिप्टो में ट्रांजैक्शन बढ़ रही है तो बढ़ रही है, लोग चाहते हैं उसमें बढ़े, तो क्या दिक्कत है? Why crypto is a concern? That is something I would like to discuss. So crypto is a concern because crypto is decentralized. No single country controls it, and as a result we cannot monitor its supply. Crypto so far may have been popular for investments, but for payments, crypto doesn't make any sense. Its value fluctuates so much that you cannot effectively use for payment. It is still not used as a currency. So the purpose for which it is meant, it is not actually being used for. And with more and more adoption, the size of crypto, it is increasing, but at the same rate we do not see an increase in transactions through crypto. So this is where we see that it could very much be a bubble. We cannot really say its size is too much today, and if it is a bubble, then it will be a doom for global economy. Frankly, I do not want to, I want myself to be proven wrong here, but there is a big concern here. Then the cyber attacks in the crypto are very bad. See, the central currencies, the currencies which central bank issue, these currencies, they are very stable, they are very safe, because a central agency, a very powerful bank or government, that controls it, and it invests significantly into its safety. But these crypto trade exchanges, some of them are startups, they do not even have much valuation, but they are trading a lot. And as a result, the safety of these servers, the safety of their currencies, that is not very good. Blockchain is a good technology, but still you need certain safeguards. So crypto remains very risky, and there are a lot of cyber attacks, lot of thefts, and also the evidence that it is used in the dark web as well. So crypto has several negative connotations. The worst thing that IMF further talks about the crypto is the lack of consumer identification. As a result, it is also increasingly being used for the black economy. It is increasingly being used for narco trade, the human trafficking, and women trafficking, children trafficking, all worst kind of crimes against humanity. So it is also getting used to finance them. It is also reported that it is used for terror financing. It is now a preferred mode of payment in the ransom as well. So these are the risks with the crypto. Then it basically, these are certain facts, and this report you will find in the download link in the description. So you can download it, you can read this summary here, and there is not really much for me to explain. There is just a bit of facts further. The key risk, the key concepts I have already discussed with you. That while crypto is good in certain sense, it decentralizes the system. But there are three major issues. First of all, how do you control the money supply in the crypto system? There is no central agency. And how do you control prices? How do you make any kind of policy here? So that is a problem. Secondly, the system is very much vulnerable or prone to cyber attacks, thefts, etc. That is problem number 2. And problem number 3, crypto being used for illegal activities. These are the 3 major issues with the cryptocurrencies. Okay, so I've already discussed all of it, so you can further read about it. The price volatility, why it cannot be used for transactions, governance risk, okay, and cyber risk, everything I've already discussed. Lack of monitoring mechanism. So please go through this report. I've I can say, summarized it in a very nutshell kind of a format and in a very small capsule type of a format. You can get the gist of it very easily. Okay, so now let us talk about the climate change, the last focus area of the report. So first of all, it talks about that there are certain sustainable investment funds. These sustainable investment funds are sizable. Their value together is $3.6 trillion. Okay, there have been more than doubling in the past 4 years. So there is a good growth of sustainable investment funds. But to believe that these sustainable funds are automatically linked to climate is wrong. These are not linked to climate. If we really look at the bonds or the funds that are linked to climate, then this is only $130 billion. Although $130 billion is a big number, I'm not saying that it is a small number, but compared to this, it is much smaller. So this can deceive us. If we look at the sustainable investment fund, then it can deceive us that its growth is too huge and the investments in these are huge. Actual investments are much less. Okay, and again, rest of these are some of the basic facts, okay, that the flow into sustainable funds that appear to support the stewardship. Okay, so not really much to explain in the climate area. It's just that it tries to highlight that in recent years there has been rise of a phenomena called sustainable development funds or sustainable investment funds. However, the exact amount of funds that are linked to the climate change or the climate, they are very less. So by raising these investment funds, we are not actually increasing the investments which are sustainable, and that is a deception in itself. Then it talks about, okay, even if it is not directly linked to climate, still it is better than non-sustainable investments. If it is not the best way, it is definitely much better than what we had earlier. Okay, so it talks about the financial stability and it also talks about certain other aspects. Now the report finally suggests what we need to do overall, not just for climate change, what we need to do overall in order to tackle with the COVID-19, the crypto and the climate. So it says that there is a need to enact de-dollarization policies, including the enhancing monetary policy credibility. De-dollarization is a very interesting concept because at present the international financial system is completely dollarized. So rather than denominating every single thing in the dollar terms, every single trade in the dollar terms, there is a need for de-dollarization and there is a need to move away from dependence on a single currency, because today, first of all, America is a falling superpower. America is declining, that can be observed, and there will be challenges to the dollar in near future. There will be significant alternatives that will emerge to the dollar. So rather than waiting for one day when there might be a sudden crash, we should prepare for it. So there is a need for de-dollarization. Then we need enhancing monetary policy credibility. Credibility means people can trust their governments, people can rely on the monetary policy so that the money supply is properly guided, so that the inflation is always under control, so that governments do not misuse the availability of currency. Okay, right now governments across the world, they misuse the availability or the power of printing currency. They print too much currency. In India, we do not allow it since the Fiscal Responsibility and Budget Management Act. So FRBM restricted us from printing currency for meeting the deficit. But in many countries there is no such restriction, and monetary policy has no credibility if you print currency too much. That in fact decreases the value of your own currency and the credibility of your monetary policy. And that also gives a push to the adoption of crypto, because crypto you cannot control. If people are going to use crypto for the transactions, then government won't be able to influence inflation. Government won't be able to control too many things. So better you control that part. A sound fiscal position, that is obviously necessary. Unless you cut your fiscal deficits, unless you improve on that aspect, you cannot achieve the first. Monetary policy credibility can be achieved only when you have a sound fiscal position. So cut down the fiscal deficit, control that aspect, and then only very easily first can be achieved. A sound fiscal position means controlled fiscal deficit and a debt to GDP ratio which is stable and within certain limits. Effective legal and regulatory measures, for example India has FRBM, so likewise, and implementation of central bank digital currency. This is there to arrest arrest means to stop or control the rise of cryptocurrencies. Although we are doubtful how much useful they will be, because people are buying crypto because they are blockchain based and they are decentralized. Whereas the central bank digital currencies, they will just like be physical currencies. Instead of physical currency in our hand, there will be a digital token. So I do not really see how the central bank digital currency will challenge the rise of the crypto. But nonetheless, this is necessary. Okay, it may not be again the best step to counter, but still, at least when we are not able to understand how to counter it, at least the first preliminary step. So it is a necessary but not sufficient step. That's what I'm trying to say. Sometimes when I criticize something, I criticize it in the position, I do not criticize as in that this is useless. I'm criticizing it that if we trust too much on it, if we rely too much on it, then there might be a problem. You implement it, but do not hope too much from it. That's what I'm trying to do. I'm just trying to keep the expectations low. So that is what the report suggests us to do. And this is anyways India has been doing for a very long time. And then India has its own financial stability report. And here we are going to talk a bit about the RBI Financial Stability Report 2022. So the report identifies that the global economic recovery that was there after the COVID-19 pandemic, that is now losing momentum, means the global economy picked pace once and it started growing fast, but now it is losing the momentum because the COVID is resurfacing. And the bigger issue apart from the COVID outbreak has been the breakdown in the supply chain system, breakdown in the production chain and the transportation chain. As a result, we have a full-fledged supply issue, and that is one of the big issue which has increased the inflation and which has forced various economies to adopt different kind of options. Again, I will urge you to go back to the economic survey. I've taken a video called State of the Economy, and in that video I have covered the supply chain issue. So if you have not seen that already, please go back and check it out. It is available on the GS Core official YouTube channel, and again you can search economic survey with my name and with State of the Economy, you can find it. Okay, and then it talks about the point again, as I've just earlier said, the vaccination. That vaccination is going to be very, very effective. Okay, it has enabled the recovery. It has enabled us to worry less about the upcoming waves. And as we have just seen, we were very much worried about the Omicron, that what kind of havoc it will wreak on the economy. But fortunately, apart from a 15 days cautionary lockdown, we didn't had much problem. So that is what the vaccination is capable of providing you, a shield, a kind of risk cover, a kind of umbrella in the rain. So these are the advantages of vaccination. That is why we have earlier said that it is a indicator of the macroeconomic stability today. Okay, and corporate sector is gaining strength, bank credit growth is improving. We have already discussed that is because of the accommodative monetary policy that we discussed in this report only just a bit ago. The next point that RBI has raised is about CRAR. CRAR is a simple indicator under CAR. Okay, capital adequacy ratio can be measured through CRAR as well. The capital to risk weighted asset ratio. Try to understand, give me a minute here. Capital adequacy ratio, what does it mean? That how much capital is adequate. Kitni capital enough hogi. How much capital is adequate. We take the ratio of capital to certain indicators which shows the operations of the bank. For example, amount of loans we have distributed. For example, amount of risky loans we have distributed. So there are various ways we can calculate the CAR. By CAR we judge whether our capital that is there with the bank, whether it is adequate, good enough or not. So this is one of the most common mechanisms, CRAR. So CRAR of the scheduled commercial bank, that is increased to 16.6%, and that is a very good number. And because of this, banks can be considered to be much more risk proof and much more stable. So that is what it talks about. And then ultimately it talks about the NPA, the non-performing assets. So apart from the CAR, it is NPA which talks about or which reflects about the bank's stability. So macro stress tests for credit risk indicate that GNPA ratio increase from 6.9 to 8.1 under the baseline scenario. I will just read it and then explain. And to 9.5 under severe stress scenario. SCB however have sufficient capital. तो हम ये कह रहे हैं कि our banks faced a lot of problem. Our banks faced a tough challenge. हमारे बैंकों ने एक बहुत बड़ा चैलेंज फेस किया रिसेंटली, जब कोविड की वजह से काफ़ी सारे लोग अपने लोन नहीं चुका पाए. लोग और लोन मैं थोड़ा कंफ्यूज कर रहा हूँ, माफ़ कीजिए. सो when people were not able to repay their loans, and as a result the gross NPA in the banking system increased. But despite the increase in gross NPA from 6.9 to 8.1 and to 9.5, our banks have been able to perform with decent stability. Means even a significant increase in NPA did not significantly affect or did not critically affect the stability of our banking system. And this talks about and this reflects about the stability of our financial system. And with that, RBI says that this CAR of 16.6%, its strength, its proof you can see here. हम ये कह रहे हैं कि ये नंबर अच्छा है, हमारी CAR बड़ी है, हमारी CRAR बड़ी है, तो उसका इम्पैक्ट भी आना चाहिए. अगर हम कहते हैं कि मैंने काफ़ी सारा रिजर्व बना के रखा है, तो कभी जब मेरे ऊपर विपत्ति होगी, मेरे साथ प्रॉब्लम होगी, तो वो रिजर्व मुझे हेल्प करना चाहिए. तो यहाँ पे हम वही शो कर रहे हैं. हियर वी आर ट्राइंग टू शो दैट when we had a big problem regarding NPAs, still our banks have stood strong, and that is because of very high CAR as well. CAR is a very important indicator and factor there. Okay. So with that, I end this discussion, and we have covered the global financial stability report, and as well as we have covered the domestic RBI's stability report. So thank you. We will cover some of the other topics in the coming videos.